All right, we are recording. Michael, it's been a long time coming. We've never had you on the show, and I know as you were explaining to Lauren, you've been listening to her ask the first question for many years back in the day as well. When the podcast first launched in January 2020. So yeah, it's been around a little while. So well, thank you for listening, and it's great to actually connect and interact with you.
Yeah, I'm excited to have the discussion and to be completely honest, probably most daunting interview from the question from Lauren because everyone's had such great answers. My good friend, Parker Lewis always has a wonderful answer to Lauren's questions, and now whatever comes up, I have to like live up to that. I don't know if I can.
Okay, yes. Parker revels in those questions, doesn't he? Yeah. Okay, Lauren. Okay, what do you have?
So Daddy was telling me on how you do like a lot of, or you've been doing a lot of projects, and my question is, what is your favorite project you've worked on or projects?
Oh, that's a dangerous question because it's like asking in front of all your children, what's your favorite child, and you're gonna piss somebody off.
Yeah.
Um,
Well, Lauren
no,
asks me
I
that all the time.
Oh yeah, no,
Yeah.
I favorite.
it's a difficult one. I'm going to take the easy route and say they're equally between on-ramp and early riders. And I'll say on-ramp's important because I think multi-institution custody. You've heard a lot of podcasts and conversations around gold and Bitcoin. I think the thing that makes Bitcoin different than gold, and this is a little bit of a taboo topic, but it's really the fact that you can insert governance. You can have at the protocol level, at the asset layer. That's where gold failed. And so I think that it's that transformative for Bitcoin and how it will be money globally. But then early riders, I say equally on the other side, because I think capital formation, the way people have invested or built businesses has been broken for a very long time. It's something me and your father are probably going to talk about when we think about Bitcoin treasury companies and the incentive alignment. And I think that once you get back to the basics of the return of capital has to be sound, we had done this before with gold. We went away from it in the fiat and the dollar world. That also will equally be profound in how society will change once everyone starts to just have a unit of account that we all agree on, and it's going to make everyone more efficient because a lot of businesses will just go away. So it's a hard one because they're kind of both also really intertwined. So I don't know. Hopefully that was a decent enough answer.
Yeah.
So early riders, do you want to explain to Lauren what early riders is, and the listeners obviously that might be wondering what that does?
Yeah. So, Lord, on the on-ramp side, it's financial services for Bitcoin. It's a private Bitcoin banking. So for individuals that get exposure, need support, on-ramp, helps, and we can talk more about that. And then early riders is think of it as like the investment bank. It's the opportunity for our clients in the outside world that's looking to express their view and getting an allocation into the Bitcoin world or the way that people will be building. And so they invest. But it's all in Bitcoin. So it's denominated in Bitcoin. We take our fees. If we don't make our investors any money, we get no fees. So we try to align everyone to be on the same side of the table. Where in traditional investing, independent of what anybody's return is, you're going to have your management fees and then some form of carry that's just above kind of the interest rate on capital.
Okay.
So they
Yeah.
they they
So
help
just
companies.
yeah,
Yep.
yeah. I think I got it.
Startups.
Yeah.
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 Perfect. Well
Yeah.
done. How many other Bitcoin companies or projects have you worked on or launched or been involved with? So we can get a kind of a rounded picture of how long you've been around the space.
Yeah, so I personally been in the space roughly 10 years and then have been building infrastructure around Bitcoin custody for a little over half a decade. Um, my journey was a little interesting or unique because I was in traditional tech before. So I was at Google and like YC backed companies. And then I was at WeWork and I was actually learning about money while I was lighting money on fire. I don't know, Lauren, if you're familiar, but WeWork has this famous guy, Adam Newman, and it was, just an amazing salesperson and kind of destroyed a lot of capital. A lot of people are like, we'll see when I have podcasts, I'll see in the comments, he's like, you should leave the WeWork part out. It's like, I love talking about WeWork because ultimately the only way you can really build great things in life is you have to know how to do things right and have taken those experiences, but it's almost important how to know what not to do and to learn from those experiences. And so I came from that world and then met who we were talking about previously, Parker. because I was like all Bitcoiners get in and you buy some, well, not all Bitcoiners now. Now Bitcoiners are buying some treasury stuff, but at the time, the old school way to buy Bitcoin is you just bought the Bitcoin, and it was on Gemini, and I knew I needed to get it off of an exchange. And so I couldn't be alone on an island with a little plastic device for all my wealth. But I also knew I couldn't wake up one day and the exchange just say, "Hey, Michael, we can't give you your Bitcoin." And so that led me to the collaborative custody rabbit hole. And was Casa or Unchained, took a liking to Unchained because really, frankly, they were from my home state, Texas, and right around Austin. Became good friends with Parker, and he took a keen eye and like, hey, when you move back, we got to get you plugged in. And I'm sure you know Daniel, Parker's pretty persistent. I moved back home, and he was hounding me. Joined that business, and that's kind of how my journey really into building in the ecosystem started. Helped for a bit on the 1031 side to establish that fund, worked with Marty, Matt, and the guys there. And then ultimately in 22, everything kind of just blew up in the kind of crypto digital asset world. And it just kind of took a step back and was like, man, there's a lot of things that don't feel right here. And so that's really what was sparked a lot of Onramp and early riders and the stuff we're building today.
Cool. All right. Any further questions, Lauren?
I do not.
No?
Thank you. No.
All right, cool. Well, thank you very much.
Great to meet you, Lauren, even though I've heard you multiple times, and have a good rest of your day.
Yeah, great to meet you too. Thank you. Have a good day. Bye-bye.
It's funny you brought up WeWork, because there it is right up on your LinkedIn. And I get what people are saying. It's like, oh man, you should take that down. You don't want to be associated with. But like, what was going on from the inside? Like, when did you start kind of? Because I remember it was such a huge thing, and co-working spaces were the next thing, right? This was going to unlock the digital nomads. It was kind of all part of the sovereign individual thesis as well. And if people had already gone down the rabbit hole on that, they were probably looking at these things. Well, this is the future. And I remember watching Newman, and very persuasive character, and money was being thrown at him left, right, and center. It must have been wild to be sitting on the inside of that and seeing that come in. And yeah, look, what was your role, and when did you start kind of what's going on here?
It's such a fascinating and great question. I don't get to talk about it enough. It was easily the best time I've had outside of, I would say, like Unchained and what we're doing now. But it probably, if I had to put so far, because I think we're just getting started on it, probably the best time of my professional experience. And the reason why is because the thing that most people forget is that there's a reason why Silicon Valley and tech companies are labeled and have the best and largest valuations. There's a fiat component to it, but at the end of the day, fiat, the dollar, drives incentives. And so if you can pay, you hear about Meta and OpenAI, they're hiring the best people in the world today at millions of dollars. And so those people, you're working with the best operators on the planet Earth. And so one of my key learnings is that it was the highest level caliber of people I've ever worked with all my entire life. Like Onramp is probably the closest in how we've really been careful in who we hire. But it was because you're getting the investment bankers, you're getting the people I remember specifically were like from LinkedIn. For whatever reason, LinkedIn hired just absolute killers when they were back in the 2010s to 14. So we brought a lot of people on because there was a VP of sales that came on, and they would kind of recruit from their old crew. And the thing that's really sad is that WeWork as a concept is a sound business, like to leverage vertical integration, to take a larger lease and then sub-parse it out, and you provide people flexibility. Like all of that is not a Ponzi. What turns into a Ponzi is or not even a Ponzi, what turns into a bad business model and bad incentives is when you take multiple things. You take one is Masa and a Japanese fund that is just required to go and blow, just kind of like shoot capital out into anything. And then you take somebody that's equally willing to accept it and say, we can go bigger and be very ambitious. And then you take something that's physical constraints and you start to layer a lot of these things. And that's how you ultimately, again, it all comes down to the incentives. But before going to the direct question of when I realized it, I will say that it honestly resembled a lot of Bitcoin internally, because internally, everyone, if you remember, the slogan was to make a life, not a living. right? And that's actually kind of like what we're trying to do here is right to make a life, not a living, like not to work just to work, but to actually do it. I think you've done a good job of inserting that like mix of it. And I think of myself, I have a lot of stuff going on, but I just think about it living. I don't think about it as work, which is, I think, the goal where we want to get to. And that's what people were subscribing to there. It's like people had been tired of being at the McKinseys and all these companies and making bland real estate and cubicles. And you got there and it was activating this space. And it was things that Google and others had picked up on. You want to be able to go there. The thing that they kind of missed that we all know is you got to have more than meaning as just the physical space. The work has to matter. But that's what mattered for the people is that they were changing the world by helping all of these companies insert the level of like that WeWork culture into them so people didn't hate their lives and enjoyed going to work. And so people were passionate and they worked 18-hour days. I don't know if this is widely known, but they used to have, thank God it's Monday, because in the culture was like you would stay after work Monday, they had dinners and everyone would be there and the people work late and then they partied hard and they like we did a lot of stuff because all this capital being burned. So that's where it was like it was an amazing experience because you're also working with the best people. So you're learning. Now where what I really realized that it was all kind of like a fugazi really was it was interesting because I grew up in Texas and it's not just Texas, I think, but there's probably a lot of places where in smaller towns meritocracy reigns true. Like you do what you say, you get rewarded. You don't do what you say, you don't get rewarded. You have a stain, people recognize that, they don't trust you, and then that's just how life works. And as we went, because I was very early to WeWork in the enterprise side, so I saw us go. And as we were scaling, and it all just started getting really murky and hazy, and who was getting promoted, who was getting rewarded with the right deals, because we were working with the largest companies in the world, and it all just stopped making sense. But then what really started happening, and you see this across metrics, is what bankrupted BlockFi and others is ultimately when people raise capital, it's almost like the same thing with the debt markets, where more debt requires more debt to keep it sustained in the same way as like if you invest in a company and they need more company to get to profitability, the heuristic is they're never going to get to profitability because if they couldn't generally have done it on the first or second round, there's no reason why more capital is going to help. And so what happens is you get these metrics or KPIs that everyone's looking at as the shiny star. And then as long as you can hit those metrics, the investors will go. And so ours were desks because we'd sell these whole buildings to Amazon and there would be like 20,000 desks in the building. And then sometimes you sold 5 desks because that was like, just what a normal small team would need. So desk was the KPIs. And so we started giving away desks for free or cutting on like for the first year on a 5-year contract. It started getting so crazy. But the thing that stood out is nobody really thought it. There was only one other guy that I worked with. He was super smart, grew up in Pittsburgh and was at Carnegie Mellon. He was a mechanical engineer by trade. So he just had some first principle thinking to him. And he just knew money didn't grow on trees. And we would just sit there and do these deals. We do our job, but we're like, this doesn't make any sense. Like none of this makes sense. God bless him. He stayed there a long time. But where my story kind of gets fun is I recognized this in 18, found Bitcoin. So I was like, well, like this doesn't even make sense. Even if I wanted to stay or didn't want to stay, I had already saw Bitcoin and realized kind of like there's a lot of people that naturally like once they see it, they got to get involved in some way. So I had been just already, I go back to my 2018 emails and it's just emailing almost everyone. And so I knew I was going to leave. And in Q1 of 2019, WeWork was the hot thing. They were rumored to IPO for $48 billion that summer. And SoftBank was doing a tender offer to buy back some of the capital. And so everyone internally thinks we're all like going to be rich and all stuff. I'm like, this doesn't make any sense to me. I don't know how this works. And I found this other thing and it's a lot more liquid and all the things we know. And this is, Bitcoin's $3,000 at the time because this is this is as the price is running down in 2018 and then 2019. And I was like, there was opportunity cost to exercise the option. You have to put upfront capital and then you have to take the shares. And versus they were just going to buy it outright in cash. And then I had that money. And so I just like sold, naturally sold the shares and had that because I already invested and was able to buy Bitcoin. And it's just a funny thing in my like hindsight because 6 months later, like the whole thing fell apart. So it was a very wild ride, but it was very informative to everything that I kind of do today because it's just, you only get one chance to see that. I didn't know it was going to be the poster child of kind of the whole fiat ZERP world.
I can imagine your colleagues as well. Like, what are you doing? You're crazy. Just another 6 months. We're going to IPO. We're all going to be rich. big titty bitches and eternal riches, like because everybody gets swept up in that. It's not just the ICOs and whatever else. And we'll talk about Bitcoin treasury companies in a second as well. But yeah, I'm sure you had a lot of people side eyeing your decision then. And well, look what happened. WeWork falls over, Bitcoin's still around, and you know you're here building in the Bitcoin space, more companies.
Yeah, I mean, it's kind of been the thing I've always, it's never good at the time until hindsight, but I've always just tried to be like truthful to myself. Like, because at the end of the day, like if you can't live with yourself, then what are you supposed to do? And so I just remember it's always like a lagging indicator because and Peter Thiel's talked about this a little bit, even though I probably should stop referencing him because recently he's not looking so good.
It's not.
But it's always the notion of like it's always going to be the out of the box thinkers do something, and then you'll see like the investment bankers come in because they're always playing off of like the old thing of like you got to go to school, get the MBA, and now people don't go to school. It's the hot thing. And very similarly, like going to WeWork, leaving Google to go to WeWork, my in-laws at the time, my girlfriend's parents were like, that's kind of weird. That's like, what is WeWork and all this stuff? And then WeWork was so hot over those 2 years. And then when I was leaving WeWork, it was like, well, what are you doing? And I was like, just trust me. Like it's and when you're inside, you have a lot of additional data. And so, yeah, I think about it kind of ties into a lot of the stuff we're doing now. It's been a 2 year slog, but it's starting to become a little bit more apparent of like, well, wait, maybe you don't want to hold all this money in your house and maybe you don't want to leave it on a third party in the same way of like, I had this epiphany the other night, the other weekend. I was like, holy crap, guys. It's like, we fully intend to like, return because our hurdle rate at early riders is 1.25x. So we get no carry if we don't return over 1.25 for time value of money and all liquidity and all that. But it hit me. And it was like, even if we like barely hit Bitcoin's return or just slightly below wherever we sit, we'll be the best performing fund out of all of venture. And like all this money will come in because of that, because there's a notion of the heuristic of being more principled and efficient, and cost of capital is not 2% or 6%. It's something much higher. And that discerning is what creates great companies. So it's this notion of like just swimming just slightly ahead of the puck before the rest of the market is like how you can act. And then you get to galvanize because you pull all the people that like see it. When we launched multi-institution, there's a couple of guys that are with us today that saw it right off the bat. And it's because it's crystal clear. And that's how you build like an actual movement. And then eventually the market's like, oh, it was so obvious. Like everyone's going to repeat back that Bitcoin was so obvious. 21 million in a land of infinite capital. But we know that's not how it worked. And there was a whole bunch of crypto whitewashing that's going to happen between now and there. And probably pub code treasury whitewashing too, if it plays out in the way that maybe we think it will.
Yeah, absolutely. Okay, right. Let's move to, well, Onramp. I think most people are by now pretty much aware of what you guys do and what you offer. But and if anybody wants to do a deep dive on that, they can go back. I've had Andy and Jesse. They've come on the show before to talk about Onramp at length. But if you just want to give people a quick update as to what Onramp is and the services that you offer and any updates.
Yeah, for sure. At the core, Onramp operates like a private banking experience. So for individuals all the way to endowments and institutions, we work with the first UK pensions. Now increasingly pubcos are coming to us. But the kicker is it's all built on multi-institution custody. Multi-institution custody, it's kind of the hybrid between self-custody and the assets are on-chain, verifiable cold storage. But you don't have to participate or manage any of the cryptographic material. And then it also is it has the simplicity of a single custodian. Like when you onboard to a Coinbase or a single entity, you get that same experience or fidelity. I personally get very excited about it because I think about there's different analogies in text history, whether it's the browser or the telephone, because you used to have to like connect wires and like to do across like the country. And there's one other analogy that was just recently coming across. Oh, the computer. If you really like go back in time and see like how they had to create the punch cards and the mainframes, and you had to like write the code for the certain piece of software to do it. Like that's what we're going to look back at the analogy. And I had to talk people through during my time at Unchained on collaborative custody, because no wealthy people want to hold all this capital in their house. And they definitely didn't want to do it at $10,000. They 100%, because we're onboarding like crazy at 100K, and imagine 250,000. And so that's kind of our core pillar is like, okay, how do we build best in class products and services with Bitcoin ethos in mind as far as decentralization, fault tolerance, and redundancy, but also just build with like the future in mind, because it's kind of like a interesting thought experiments. Like we would think it's crazy if we told everyone you're insane for not holding all your gold underneath your mattress or geographically segregated. But we feel okay to tell people, oh, you should just hold all your Bitcoin self-custody because that's the right way to do it. And gold and Bitcoin are fundamentally the same thing in that sense. You could take possession. Maybe it's a little easier to take possession of all your Bitcoin, but the concept of threat vector still exists, that if somebody knows where you're at and knows you have access to all this money, there's a reason why you have controls. And so I actually enjoy this concept or this topic, because the most educated and like friends of mine think we're all nuts, right? Because we're like, wait, there's a different way. And I just don't like being in consensus. Like, it's not that I try to be outside of consensus. It's just like, that's just already, the consensus means that the market has already decided, like, we're there and then we all agree on it. And I feel like everyone agrees that self-custody is the thing, or we're going to trust a third party custodian. And I don't think that's right. An example of this is like proof of reserves. Like, nobody ever gets to articulate how proof of reserves is, it's kind of like a fallacy, because proof of reserves, sure, I can do proof of reserves today, but tomorrow, if all the assets were stolen because my internal team colluded or somebody hacked me, well, what was the point in proof of reserves? Like, inherent to multi-institution custody is proof of reserves. And something we don't even talk about yet is you can actually attest and have provenance around that single address by 3 independent institutions, or 5 if we do a 305, that address is actually underlying, belongs to that person by different institutions that did it because they've already onboarded them. And so these are just concepts that we're just a little bit early, but as the price rises, it's natural that people will look out for the best solution because it's their money.
So from memory, you had 3 institutions. Has that changed now? Have you got more?
Yeah, so we have 4 live today. So it's Onramp, BitGo. BitGo, it's sadly like they're one of the best custodians in the world. They have over $100 billion in assets under management. They're going to IPO, but a lot of the Bitcoiners don't know. So they're really great at like what they do, but also from a Bitcoiner perspective, people know. CoinCover based in the UK, and then Tetra Trust, which is a Canadian qualified custodian.
So that's important as well, because they're geographically dispersed,
yep.
which is something, again, that if people are looking at a multi-sig setup with the collaboration of Onramp, one of the first questions are going to be, well, a 6102 attack, and all of a sudden all exchanges in the US are told no more withdrawals under any circumstances. So that wouldn't matter if you're in an on-ramp situation, because you've got the other 2 or 3 now outside of the US that are able to sign those transactions and get your Bitcoin to you.
Yeah, that's exactly right. There's some other things that if that ever happened, they're going to go for single exchanges first because it's the easiest. There's a lot of building in Bitcoin where you want to, and I learned this at Unchained, whenever you build a product in the space, you want to take yourself out of the place to rug the client or be rugged, right? So being as a single custodian, I could never go to sleep if I had all of my clients' assets, because like if my team colluded or if the government came to me, like I could. So that notion underpins a lot of what we do, in the sense that if something like what you described happened, there's going to be a lot of smoke around, people withdraw their assets, but there's also the thought of, or the logic of violence kind of changes, because it's like, well, it's also not an omnibus wallet. That's something that people forget, that in traditional custodial models, whether it's Coinbase, Unchained, Coinbase, Fidelity. I don't know if I think River's also would more likely. Yeah, they do, because they put it on chain. It's an omnibus wallet. So if there's ever anything that happens to it, whether it's collusion, hacking, or government, it's a very easy target to go. And it's similar to corporate treasuries, versus the way we do it is every wallet is on chain, requires its own multiple key ceremony by multiple institutions. So it's a little bit different. We have a Latin American key coming online, Middle Eastern key coming online, another US big firm coming online. And then we're actually going to be doing lending with another firm. And there's like 4 or 5 other things like coming that are public. There's been a lot of stuff working in the background, but yeah, it's been a very fun ride.
So if somebody listening is now interested because they do want to protect their stack a little, more securely than they have, they are not comfortable with buying three separate different wallets, setting up the multi-sig, dispersing them among friends or family or whatever. And they're thinking, well, yeah, Onramp have probably got a half decent service here. It's definitely worth them checking out. What would be the fees? What would be the walkthrough process?
Yeah. So I think one key thing is it's not all or nothing. Like everyone has their own risk profile and threat vector. And so some folks that are worried about their family recovering and all of that, they put a large percentage there. And others maybe not afraid of that, but are just afraid of whatever reason, they just want access to that. And they split between, self-custody and third party. We all agree self-custody is what makes the whole system work. Um, and then you can oscillate too based on what you're concerned with. The onboarding experience is something to take a lot of pride in. It's from our engineering and product team. Historically, when you onboard to any of these, multi-sig in itself is a really industrial style product. This is why collaborative custody took off, because for somebody to really build their own multi-sig wallet, not only to create, have three different XPubs, three different private keys, geographically segregate all of that, think about recovery, and then make sure they're all backed up via the right wallet configs and wallets is not easy, and not to mess it up. So that's where collaborative custody comes in. But where collaborative custody kind of falls is you still push all the burden to the individual. So they have to, like, if they lose it, they're out of the game. But it's also inherently full of a bunch of friction because you have to ship the device, you have to go through onboarding, you have to make sure the person's familiar with that. So it used to take us 2 to 8 weeks to onboard people. And then a lot of people left their assets on BlockFi because once you get onboarded, you still have to inherently understand what you're doing, because the reason why you're using that is to have no single point of failure. So if you're relying on the third party partner and they go away, well, what was the point? You might as well just trust Coinbase or whatever, because if you messed it up. So we onboarded 2 to 8 minutes, as long if you're in the US. If you're outside, it takes a little bit of KY, it has to go through manual review, but we're actually going to streamline that. So in about 4 to 8 weeks, US or international, will be able to onboard in a few minutes. We start at like $1,800 a year. So if you just have under 500K, and then it kind of scales up depending on like amount of white glove treatment you need. One of the big things people use this for is inheritance, because that's been the hardest thing, is just the notion of, like, us as individuals. When we adopted Bitcoin, we were much younger, right? And as we get older, like, life just gets a lot more serious. Our kids grow up and they need to naturally be able to inherit something if something happens to us. And then it's just unfortunate, but we've seen increasingly post-COVID, a lot of people, it feels like, have been, passing or getting sick. And so as that happens, it's kind of like directly correlated to Bitcoin's price rising, right? Like as Bitcoin's price with time goes, we all also see mortality. And so a lot of individuals just feel that and inherit in our solution. There's no extra cost. They just come in and they set up what's called termination on death certificates. And that effectively helps bypass probate. So we can set up trust and do all of that. That's easy. But if a lot of people just don't do it because we're young and think we're going to live forever, so they can just naturally put that in. And so God forbid something happens, their family would be able to show up and they could have the right, death certificate and go through the procedures. And then each of the key holders would authenticate and then sign to move the assets.
Yeah, I remember that being a very slick process. Like it didn't take much time at all. To set up the descendants, am I right? Like
yeah. And what you're keying in on is something that, like, I think probably will be a key theme of stuff we talk about in the corporate treasury stuff, is that, like, the reason where the computer was so profound or interesting, and like why Jobs, they've been just going down this rabbit hole of him and what he's done. I don't know why, because I was previously looking at Henry Ford. But where he really found profound was that you can take, like, he was looking at these different eras and the eras and the way that they transition, and how he saw computers giving, like, the power to a man of like 100+ men from a productivity perspective. But it was very cumbersome and clunky. And the idea in his head and what he tried to push through his products was ultimately the ease, but accessibility, and what it meant for the individual, the empowerment it gave. And we know this is what Bitcoin, the individual. Like, I want to change our company slogan to be like, allows your dreams to come true, but my team won't let me do it and we're not ready. But that's what I really think of, like, what Bitcoin does is it gives people the time to take a step back, right? To get off the rat race and ultimately express their view of what they should be doing in the world. The problem is that it's been inherently so hard to get material exposure because of everything we're talking about here. Only the hardcore people understand what we're talking about, right? Like it's very hard to like discern all of this. And there hasn't been an easy way to click a button and park material wealth or start and then get put more and more with no friction, to your point, when it comes to inheritance, like a Fidelity or Coinbase account. This is why corporate treasuries, ETFs have been the fastest growing products in the space, is because they feel very similar to the existing market. And until we get there, we're always going to be in this like weird niche where people are going to adopt inferior products and get rugged. And so that's what I think has been essential to this process. And we've been growing like crazy. Most people still don't know who we are, but we're going to kind of change that. We have a lot of things in the plans from like a public kind of digital aspect.
All right, very cool. So Bitcoin treasury companies, it's the big, we've almost shifted away from core versus knots now. That seems to have settled down a little bit. But that was a really interesting part of Bitcoin's history as well, and it will flare up again, I am sure. Bitcoin treasury companies have definitely taken the headlines over the last month. What's your stance on them? How do you define a Bitcoin treasury company? Where do you think the nuance is being completely missed?
Have you heard any of my takes on this? Not really.
No.
I've been talking a lot about it, so I just didn't know. I mean, would it be okay if I'm curious your thoughts first?
Yeah. So I think there's a scale. Obviously, there's a scale to everything, and you have what I'm passionate about is mom and pop stores, small to medium sized enterprises, your local pub, your local cafe, your butcher, your baker, your candlestick maker, the people that you are interacting with each and every day, family businesses. It's so freaking important for them to start getting Bitcoin on their balance sheet, whether they are selling their goods and services for Bitcoin or using capital each month that they put some profits that they can take out of the business into the business, just so they can stay alive and being around in the next 5 to 10 to 20 years time, and then pass that business down through generations like we used to have. But Bitcoin would be able to apply that in real life. And at the other end of the scale, you have people that are spinning up companies out of nowhere that are offering no goods or services and never have done, and are just raising cash to buy as much Bitcoin as they possibly can. And that doesn't make much sense to me at all. And we're getting all of these new metrics being thrown around like MNAV, and people are losing their minds. And it's like, I came for the Austrian economics and stuck around to day trade MNAV. And people are losing sight of what we're here to do, in my estimation. And then there's everything else in between. So as a Bitcoiner, as someone who is invested in Bitcoin and looking to invest in Bitcoin, so what's happened here in the UK, which has been very concerning, a lot of people here in the UK have pent up cash they cannot access until they're about to change the rules until they're like 58, 68. I can't remember. Whatever it is, it's years away for most people, but that cash is there and they can't use it and they can't allocate it to Bitcoin. So what they've been doing is allocating it to Bitcoin mining companies or MicroStrategy, for example. That's why a lot of Brits hold MicroStrategy stock, because they can call up their pension provider and say, please invest into MicroStrategy. And it's done very well for them. But now these new companies are coming online saying we're going to stack Bitcoin onto the balance sheet. There's a couple of them here in the UK, and they've gone mad and they've gone absolutely bananas, and then they've just fallen out of bed again, because I don't think it's being done properly, and I don't think it's being done with the right intent, but I can't tell. I'm just getting the spidey senses. So that's very interesting, especially when you've got people like David Bailey, who has his UTXO fund management, looking at spinning up Bitcoin treasury companies, or, for want of a better word, rescuing zombie companies in capital markets in every country that he could think of, Just, it sounds like a total pump and dump to me. And if you are pumping and then dumping on unsuspecting retail, that's one thing. But if you're pumping and then dumping into people's retirement accounts, that's a whole nother level of mental gymnastics you're going to have to, live with for the rest of your life. So there's something very strange going on here. It feels very ICO days, and it's concerning. But back to what I said at the beginning, please, if you're a small to medium-sized enterprise business, if you're a mom and pop store, don't be put off stacking Bitcoin into your balance sheet. That's definitely something that you should be looking at.
Yeah, I think it's really well said. I think that's directionally what's happening. My thoughts kind of mirror in the sense of generally everything's good, or everything is good for Bitcoin. This is kind of the nuance. What's happening here is everything's good for Bitcoin, and ultimately, what you just described, if it puts Bitcoin to $1 million and then it crashes, well, it's at a different scale, but that awareness is going to drive more adoption to Bitcoin if we would have got to 250. So that's the sad part, right? Like that everything's good, even though it's not good for the Bitcoin or the holder. Now, what you said about businesses resonates very deeply with me. One of our portfolio companies, Acropolis, is exactly this, is like business treasury, because from SMBs all the way to corporates, they naturally need, there's a bunch of things from buy, sell, to governance, to consensus with the organization, to how do you manage volatility, how do you lend against it. And I had a very similar, I grew up in the area that's been flooded right now in Texas, and I have some property out there, and I was at a small like taco shop, and it was during COVID, and all of the market prices for the tacos, like the tacos were generally you're just like static, right? It's tacos, like how does it change? It's not like beef where you go to barbecue and then like the beef is always or now always moving. And they had a bunch of tape on the prices, and it was because they had to change the thing. And it hit me. It's like these people, I care about them. They need Bitcoin because the only way they're going to survive is if they hold a better form of money, but then also how they'll thrive because they'll buy out the taco shop across the street that is not, they're just going to be able to outcompete them. And so it's underpinned a lot of the stuff that we're doing, and also kind of what you're driving at is you just need it to exist. So that's the natural part. Now around the corporate treasury, I think why we're probably both, and like there's a sentiment around it, is we probably, you tell me if I'm wrong or if I'm missing something, is we probably expected it off of Wall Street, but we didn't. So we expected that because that's just natural, but we didn't expect the individuals, because what's embedded in this trade is what you're saying is most people. Because if we're wrong, then show us your book, show us your Bitcoin, you convert it into the shares, and show us how you're going to lock them up for 10 years. Because if not, then what you're saying is right, is that you get in early, you're going to effectively dump on others. And we didn't expect that from the people that were trying to educate Bitcoin. I understand why they're doing it, because at the end of the day, there's been very little money to be made in this space as an educator, and people have done a lot of work. And so it's sad. But at the same time, to take that, it's almost like affinity scamming on your reputation to take to these companies. They should know better. And it ties into the people like us, even that are paying attention. I remember I was at the Block. I didn't touch on this, but back in like 2019, at a very small time, it's how I met like Matt Odell and Parker. I was like at the Block for a very quick stint. And I remember they were talking about Solana and all these tokens, and could have bought them at 80 cents and 50 cents because you can see pattern recognition. They're like tech companies. You can see the vibes, right? You can see the teams behind them, and you can make some money. But back in the day, and we had to do this thought experiment specifically with Parker, it's like there's a lot of mental gymnastics you have to do when you're going to trade. There's not only I'm not going to go in any specific order, but there's not only taxes you have to do, you have to be outside of the market. It clouds mental headspace and what you're supposed to be doing, because you have to get out of the trade. You have to be a good trader because nobody knows when to get out. If I was in MSTR, I would never know when to get out, and it would just be sitting there. And so so it's the same thing with these insiders, that people that follow the space are seeing these new things, whether it's in Canada or UK or wherever, and they may make some money. And then this insidious part about this is you start to, and this is why I can never allocate to them, so I can always speak objectively to it, is like, well, then you naturally, you have to make, you start to see this. You always know when people start posting on Twitter in positive lights, because, they started to put their own portfolio into it. So you have to start to like rationalize why it makes sense. And the sad part, and this is the last thing I'll say about this, because we were talking about it last week. We talk about it every week now at this point on the podcast we do, is the Bitcoiners are fine in this. Because if you think about it, we all understand what money is, and then we understand what speculative assets are, at least most of us. So we're all fine with, if you have your stack and you take a little sliver off and you play a little penny stock, like no fun, no harm, whatever, you can go speculate. The problem is that we're forgot what it's like to come into this space and get thrown into the wolves with all these different things. And this is like the biggest wolf trap, because this isn't ICOs. This is like, everyone knows they're 60-40, and to be able to click a button to take a little bit of their, equities, because equities map perfectly to what they're doing, because they're equities, what they're holding Bitcoin, and to say, I get my Bitcoin exposure, we don't have to deal with the keys and all of that. And that they should know better, because that's how the market's going to come in. So any way they're rationalizing it is effectively just hollowing out what Bitcoin actually is as money versus a speculative asset. And I think that's where we're both, and some other folks that have been maybe not as loud about it, are feeling why it's not, in the best interest of the individual.
Yeah, absolutely. And you've got big interests backing these things, like in the case of 21 or XX1, whatever it's going to be listed as. You've got Cantor Fitzgerald behind that. Like this is Wall Street. This is the pinnacle of Wall Street. This is as pointy as it gets. Those guys, they know, like this. They're not on your side. They are not your friends. These people, like, they are here to financially engineer something for themselves. That is and if you are going to be last to the trade. As like you said, you're going to have to time it. You're going to have to get in. You're going to have to get out, and lose some sleep, and most likely lose some Bitcoin. And how much? And when you're from the investment point of view, how much money now is getting sucked into this stuff that could, as an Austrian economic person would look at it, like the opportunity cost on the other side. All of these companies that are now not getting this capital because this hype cycle is in complete froth territory already, and we're only what, a few months in.
Yeah, that's what scares me the most, is we're only a few months in. I will say there's a little nuance to this in two aspects. One is, maybe this was always the way it was going to go, in the sense that, there was always something very poetic about everyone gets Bitcoin at the price they deserve, because there was something around the Elizabeth Warrens were the last to get it, rightfully so, because they just had benefited from a fiat system, and the boomers, things like that. But maybe it was a little naive, in the sense that there were going to be large bag holders that were going to play the fiat system to get it. But what I will say, so like, maybe this was always the way it was going to go. And there is some nuance in that, like, there's a probable bet that I think a lot of these things delever, because it's just nonsensical for corporates' pensions, because they hide under that corporates and pensions are adopting them. And they're like, sure, at the margins, they're doing strategy because of the liquidity profile. But like, there's a reason why all these companies are creating communities, create communities for pensions and institutions. But I could make a case that this becomes the standard for all companies, specifically public companies, because Bitcoin is going to be inserted into, all markets and products to help the deleveraging, right? We see this with bet bonds. We see this with, corporate treasuries, or like strategies in general. If you have a bunch of products and services and we're suffering via deflation and AI, like, you naturally need something to absorb that to stay alive. So there's a case to be made that it'll just be soonly like understood. You get penalized if you're a public company that doesn't hold Bitcoin, and then they'll have a premium because they have more. Like, I can see that play out. But there's two things to call out. One is they'll still blow up because they're humans running the show, and there's a lot of things happening under the scenes, and that's why they don't, under the covers of like where the custody sits, because a lot of them aren't actually custody. They're trying to make additional margin, or additional. They don't talk about it. But where I benefit, or where I can go to bed happy at night, is at the end of the day, it ends up in a fair system, right? So like, if the company or the individual across the world buys Bitcoin at $1 million, $100,000, or $5 million, sure, ideally they bought it lower and they could benefit. But the reality is, they've done that if it wasn't at the price point, the liquidity profile, and awareness. But it's a meritocratic system. You can't make more of it. And then the only way to get it from the individual is to deliver value.
And so, sure, the fiat setup could have let them have it in the same way you win a lottery ticket, but most people give the money back because they didn't actually make it. And so I just think as the natural order of things, like, gravity and the water flowing, like this money will be delivered back to the market. Now, I don't know how, but I know they won't do, unless they're very good allocators, they won't do productive things with the underlying, how they're proposing that they're going to do. And so it's just kind of, I've been just trying to work through this, and it's just kind of like trying to work through life, right? Like there's just nuance and there's no black and white, I think.
Yeah, it's and yeah. And then the last part of this, which people aren't, because it's all fun and games at the moment, right? It's all about number go up, and there's a new IPO coming soon, and I've got to get on this, and there's a new company announcing that they're gonna, so I've got to get on that one. Want to be part of a pipe deal, all of this kind of fiat jargon, which is sad to listen to. But what happens when in 18 months' time, 24 months' time, whatever it is, we have the rollover on the Bitcoin price? So the underlying asset all of a sudden starts tanking, like we know it always does if you've been around long enough. But and of course this time it's different, bro. Wall Street's in, and these guys that are holding this Bitcoin on their balance sheet as Bitcoin treasury companies, purely Bitcoin treasury companies, how do they manage that? What are they going to do? Are they going to panic? Are they going to start fire selling into the market? How's that going to affect all of the other businesses that hold in Bitcoin on their balance sheet? What the headline's going to be coming across CNBC and Squawk Box? There's going to be blood on the street, and it's all going to become one big mess, and it could really fully affect the, not just now the Bitcoin price, but the bourses across the world as well, because a lot of them are going to be hyped up on the back of a handful of companies that have been stacking all this Bitcoin, and now it's completely rolling over.
I mean, you literally just described why Onramp was launched. I didn't really want to launch Onramp. I kept looking at this problem of self-custody or third-party custody, and I saw everything blow up in 22. I had a first-hand seat of all of it and was like, well, we're just going to redo this. Like, in my opinion, I know you like to get a little conspiratorial, so I'll just do it a little bit on the side, is that was kind of the dry run for what you're describing. And there's actually a historical precedent from the tulip bubble to the Great Depression to FTX that this is just a capital reallocation, and it's a way to move money. And so you naturally have the hype cycle. It comes into centralized entities. It happens to all go away, and you quote animal spirits, and everyone chalks it up. And there's a bunch of people that end up. And what really has helped me go down this path, it just randomly, nothing's random, so it wasn't randomly, but I watched, have you ever seen Cinderella Man?
No.
Fantastic flick. I think you and Laura would love it. It's basically about a boxer that had won everything, and then the Great Depression happened. He put all of his money, this is back in the 20s, all of his money into the stock market. And they lost everything. And it's just like sad because it's a movie about the guy's redemption and coming back. And he's Cinderella Man because he's a man of the people, that he gets his way back. But it really gives you a firsthand experience. It's a very humble movie, because you start to realize like the value of money, the value of counterparty risk. And I started looking back into the Great Depression, and it's actually astonishing, where they talk about buy now, pay later, and a lot of these like things on ships where you'd be able to trade. It's very similar to like a mobile phone when you're on vacation, because when you're on a ship, they would be, all these people would turn into traders. Everyone turned into a trader. It's very similar to like the Weimar stuff. And I think what ultimately is happening here, what people are going to recognize, is that Bitcoin is money, and all these other things are securities, and they're not money. They're not stores of value. They're not like Bitcoin isn't an investment. It's a way you preserve your capital. And that's the big reformation or renaissance that's happening. And that's the dislocation that people are forgetting, that like, you can have these companies run, but if you wake up one day and the government seizes their Bitcoin, or it's hacked, and you just go to zero, or the deleveraging, and you just lose all of your wealth, where conversely, you can just hold the money. Maybe you don't realize the gain, but you also protect your wealth. And that's a big thing that I think a lot of people you brought up like there's reputation. A lot of the Bitcoiners are already wealthy. Like, what are you chasing? This kind of ties back to like biblical stuff and like false idols. Like you're just chasing like wealth that you don't even necessarily know why you're chasing it because you're already good. And if you sell your soul for more money, like what was the point? My lights just turned, my auto lights, but yeah, I think it's just a big kind of reorganizing of society and like what value is. And I always love the, gold and Bitcoin or money and everything else is credit. And it's just the rest of the market's not like hasn't woken up to that.
What's incredible to me is the the people that are showing up now on this carousel. You've got Pomp throwing his hat in the ring and raising God knows how many tens or hundreds of millions of dollars. Like, how many scams does that guy need to be involved in and promote before people just like stop throwing money at him? It's incredible.
Yeah, I don't, it's just hard because yeah, I do like I've seen a couple of these firms and they all leverage that they're going to be different by offering financial services and they're going to be doing other things. So like inherently in buying Bitcoin and leveraging, because a lot of this comes down to the marketability of the individual and the work that they've been putting in for 5 to 10 years. Because the guy's a hustler, right? He just like works. So he's able to leverage that in his connections to buy Bitcoin. He sees everybody else doing it. So it's an opportunity. So I just have a difficult time in figuring out, like, do you blame them? Do you just explain it? Do you go and do what, like, I think some people are going to rationalize is like, there is a version that this becomes the norm, right? And some go away and blow up, but then the capital moves to other companies because the equity system has so much capital, right? That's stored in people's wealth. And that they're going to look at these companies, and it's almost like how you look at revenue and the multiple of revenue. It's like revenue plus Bitcoin is your multiple of the valuation. And like, we actually might be Luddites. I still haven't figured it out. Like, I have to think about this because we're allocators. And then we also just think about, like, you have to just rationalize it. And then there's another component to this of you don't actually have to play the game though, like no matter what, because I think about this we talk about it. We have a podcast that talks about like investing in a sound money and standard. And there's a notion, I'm sure you're familiar with like Uber and what Masa did with these companies. They call it the money cannon. So the way that they would position, if you want my investment Uber, you have to take it at these terms or take this amount of money, because everyone's incentivized throughout the whole structure to just deploy more money so you can raise more money. And it's like, sure, Travis, if you don't take it at Uber, well, we're going to give it to Lyft. And people like to think that that's not a decision, but there is a decision because you don't have to play that game. Now, there's a game that Silicon Valley wants people to play and that you're expected, and maybe you got too far on that journey. It's why we've been very careful with how we built Onramp. But there's a version where the beauty in life is designed around constraints. So you can maybe not play the exact game, but you can counter position and offer different services. Like when a company's big, how do you beat them? It's like you get more bespoke, you get more white glove, you do things that the CEO of a large company can't do, and then you start to find wedges in that. So I still, again, like there's a balance of, do you play the game to get the capital to be able to influence your position, because you can't do that unless you have the same capital markets or at least somewhat equivalent, or do you just completely shift and the only way to win is to play a different game? I don't think there's a right decision, to be honest. I think everyone's going to be personal based on like their bias and how they think about like company building.
Mm-hmm. Yeah. And well, there's no stopping it. To your point earlier, it's here. Maybe it was inevitable, but I think the warning to the listener is try not to get caught up in it. There is definitely a hype cycle in this stuff, and tread carefully, stay humble, stack sats, self-custody, multi-sig, do whatever it is to keep yourself safe and your Bitcoin safe, because there are certain people out there, these big companies, the ETFs, or they want your Bitcoin, and that they'll find clever ways in which to help relieve you of your Bitcoin. And that's I just don't want to see that happen. There's been already too many horror stories. We've been around long enough to know people that have lost their Bitcoin, and bad investment decisions or bad setups or just leaving it on exchanges or whatever. There's a bunch of different ways that you can do it. And selling out of Bitcoin to raise capital to buy into one of these, that would be that's a bad idea. And good luck to the small companies, the companies out there that are just looking to, and even the startups. There are certain startups out there in the Bitcoin space. They raise a little bit of funding, and rather than just go out there and buy the best marketing and dev team they can buy, they will put a certain amount of it into Bitcoin because they know that's going to lengthen their runway. And that is a prudent thing to do. Does that make them a Bitcoin treasury company? Not in my eyes. That just seems, yeah, what is the definition of a Bitcoin treasury company?
So here's a good question. It's great you brought that up because here's the nuance. So I'm sure you have an affinity to the startup that's trying to deliver value and build the best product. Well, what happens, and this is a completely unbiased question, just thought experiment. What happens when they say, oh, there's market demand, go reverse public via merger or whatever, and you can raise more capital to accelerate your business without dilution? Are they a scammer? You see, like that's what I think. I don't think Pomp is going into it like trying to scam people per se. I don't think a lot of people are trying to go into it to try to scam people. I think you're going for an opportunity. Now I do think there's people you've referenced that maybe are going in directly as a scam, and they see this and they see ICOs, and but also those people have generally already blown up themselves up in crypto once, and so it'll probably happen again. I liken all this to the lottery. It's like nobody ever keeps the money at the lottery because it wasn't their money; they just got lucky. And it's the same thing with the people that make the wealth, and you take it away, they'll remake it. Like they're actually not that concerned. Right? Like it sucks, but you'll make the money back if you know how to like deliver value to the world. I think the core thing that I think that we probably both agree on is important to call out is this is a testament to how like murky the fiat system has gotten, that financialization, that people forgot how to actually deliver real value to the world, and especially Bitcoiners, because like the reality is like, if I was an influencer and wasn't doing this, like I'd probably do the same thing. It's like free money that you look at. But it's because people forgot how to think like about how do you deliver value and create value and work to deliver the value that's not financial engineering. And then the other side of that is, and I can't help but liken it to COVID, because COVID was such an insane proposition of like how they locked people away. You would never think that could have happened before COVID until it happened, right? We still probably don't believe that. It just seems weird. Is the very similar thing with counterparty risk, because the gold bugs always understood this. They just didn't have the right time horizon. Is you want eyes on the gold, you want delivery on the gold, because the paper gold was ultimately not going to be called, and they lived through understanding, not only 6102s, but just like the notion of paper gold and counterparty risk. And so there's a reality that we're all just assuming that everything ends up okay in the traditional system, because we've lived through, but everyone knows in Latin America countries or Lebanon or, Cyprus and all these places that have just had bail-ins or all their capital taken, try to tell them, do you want a corporate treasury or do you want the underlying? And it's like 10 out of 10 times they want the underlying. So there's just also this notion of we're all just swimming in this water boiling, that we think everything's okay until it's not. And you just wake up like that movie in Cinderella Man, where all your life has been taken. And it's like, is the risk really worth it? That all these different levels of risk that could happen where the asset's lost and you end up with nothing. Is, to your point, the retirements that can get wiped away. Like, it's just, that's the thing that I think we've kind of all forgot.
One of the counter arguments I've heard from people who are a lot closer to this than I am, and from people who I greatly respect, is when I ask the question, well, what economic good or service are they bringing to the marketplace? What value are they offering? And it's invariably the answer to that question is they're building a bridge between the fiat space to the Bitcoin space, where all of this pent-up demand, all of this money, this wedge of capital can now cross that bridge and enter into the new Bitcoin system, so to speak. And I can't really square that one away. I have to ask, who's building the bridge, right? Who built that bridge? Okay, you got to look at those individuals and those companies. Who did they build it for? Like, who's it really targeted at? Has it been tested? Bridge, right? Financial engineers aren't, bridge builders. Has it been tested both ways? If you send money one way across that bridge, is it going to come back the other way? And who's charging the tolls? If you look very closely, if that's the service, if the bridge is the service, they're the questions you really have to start, scrolling through.
It's a fantastic metaphor because that's why I think this ultimately all comes crashing down. It's the simple notion that let's just pretend it is institutions and all these most sophisticated investors that can't get exposure. One, I think that's kind of crazy. Like at the margins, maybe they want certain price exposure directionally or downside protection. But if like people just want Bitcoin exposure, so you're saying that they can't figure out how to get the best Bitcoin exposure, so they have to default to this. So that's the first assumption. Like that's probably not true. But then the real thing is that everyone coming into the space, it doesn't matter if it's a pension or an individual, always comes in with funny money, with like the stuff in their pocket, the stuff they find. It's Cash App, it's ETF. We all know it doesn't matter who they are over a long enough time horizon. As the price appreciates, counterparty risk happens, or they get educated. And it's generally a confluence of all those. They end up increasing their exposure because it's the best performing asset of all time. And then they ultimately seek out the best solution. So if that tracks with all these people that are going to be allocating, that are trying to come across this bridge, they're going to run across because they understand the bridge is halfway broken and come into the things that we've been talking about, whether it's spot custody, multiple institutions, multiple jurisdictions. You get the synthetic version, you get underlying Bitcoin without all of the actual dirt in that product of the other one. So it's to your point, like this is at minimum where I ultimately have landed with this is just a short little blip into the market being educated on like what they actually want. And it's just a product of it's so hard to understand Bitcoin and how do you like actually take delivery of material amounts, that this is that like mini bridge. But it's not the place where people are going to leave all their money, because it's nonsensical if a pension or endowment or a family office parks 3% and it ends up as 15 or 30%. They're just going to be like, oh, leave it with them on that single custodian, and I hope everything goes right, when they see everyone else around them. Because this would also give that nobody else blows up, nobody else uses too much leverage, nobody's custodian goes down, that they're naturally going to revert back to more sound solutions. It's just again just pure game theory on like how it would end up.
Mm-hmm. And I've had Sam Roberts on from Cartwright, and he has been very influential in helping a UK pension fund allocate some of their assets under management, and set up with you guys, with Onramp, a custody solution that they are fully 100% happy with, collaborative multi-sig, institutional multi-sig, so that there is a way for, if that's a UK pension fund that's doing that, there is already a way to get exposure to Bitcoin, to the actual asset. I'm pretty sure they wouldn't be buying a ticker symbol that has exposure to Bitcoin and just leaving it like that. Would be insanity. So the bridge wouldn't work for those guys.
Yeah, but you're keen in on, you'll appreciate this. This is the incentives of the existing legacy system. Is Sam and Cartwright are world class and they're sophisticated. They lived through the GFC, so they understood counterparty risk and needed to get rid of all of it. What's sad is that there's a lot. So for anybody listening, Cartwright is a pension intermediary. Generally, pensions, endowments will naturally work with other consultant firms to help vet asset managers' products and different things like that. And they set in different geographical regions based on the clients they serve. And so we had a great experience there. But then we've also worked with consultants in the US, and they get very close to particular firms on the asset management side without naming them. And I've sat in rooms and debated with the large firms. Like these are $20+ billion like consultant firms. And when you get that side, that large, you naturally have connections via the existing asset management products that have been created. Top 10 basket of cryptocurrencies are now the next thing. You're seeing a lot of these crypto firms and VC firms starting to like play this trade into the treasury companies. And so it goes back to the incentive model maybe you get, it's like A, taboo to bring up spot Bitcoin. B, you may only get a very material or immaterial position versus like a treasury strategy. And especially if you can get in earlier in your connections, because there's no getting connections to Bitcoin early. Like these things are a little bit different if you can seed them. And so to your point, there's a lot of this like legacy kind of like connectivity based on capital and names that you're getting. You will get these pensions and others into these trades because the consultants are incentivized to park them into that versus that. I see this firsthand. So it's but the alternatives is like, again, it all is just going to shake out in the same way that FTX shook out. And there's a bunch of dirt or mud on the faces of the, like, I forgot what it was like multiple Canadian pensions that had allocated to FTX. Sequoia is another great example. They're like a blue chip world renowned VC firm, and they have that stain that they'll never get off. And so that's the idea about what we're talking about. Even if we're wrong, we can at least go to sleep at night saying we didn't necessarily participate or put people in and talked about it, versus if it all blows up, well, like that consultant firm has been around for X number of years, that reputation, the firm, the people put them in there. It's like, where was that risk? Nobody told me that there was all this embedded volatility or counterparty risk inserted into this product you put me
in. And I'd love to know how they're custodying it, right? You guys, you would have a front seat that you've built a product that they should be beating your door down. It's like, hey, we're about to go public. We're about to put like tens of millions of Bitcoin on our balance sheet. We do not want to be the self-custodian. We need a multi-sig, a multi-institutional setup. Are they coming to you? I mean, I know you can't name names, but you you must be thinking, surely that there's got to be a knock at the door soon.
No, so we are, like, that's the beautiful part is most people don't know who we are, but sophisticated Bitcoiners do. And so the way our product has always ended up, whether it's Onramp or early riders, and this, I got lucky in the sense of it's been the most surprising is we have the most sophisticated clients. And it's after talking through them and learning this. And these are people that work at the largest institutions of the world that have their own custody that use us for their personal stuff. Similarly, the pubcos have started onboarding, but these are pubcos that are very sophisticated and are looking at this, that already had businesses. They're leaning into it. So they already had businesses that were publicly traded. They are adopting more Bitcoin. Their stock is performing because of that. But they also understand everything we're talking about here and are saying, we want your solution. And I don't know if they're thinking about it this way, but the way we're going to start pitching it is like, it's also going to be a net benefit, because when people start blowing up, capital is going to flee from these things that are opaque. And so we have enterprise products that are already live, but we haven't really marketed. So there's going to be a lot more for like just anybody from an SMB all the way to a pubco that would use our solutions. And it's not just multi-institution. It could be a 305 in the future. It's rules-based controls, permissions, multiple wallets, all the things you would need as a like corporate business to manage a treasury. But where you're keying in on is there's a lot of companies that will never work with us. And it's not the same, but it kind of is. It's like my thesis on why MicroStrategy will never show where their underlying Bitcoin is. It's not about counterparty risk or like anything outside of, they want optionality to do things with the underlying. And a lot of these pubcos right now are actually doing that. So spot Bitcoin and the equity premium is not enough for them. So they're trying to generate more yield on the underlying. That's just 100% a fact. And we'll see how that shakes out.
Yeah, I mean, we didn't really mention MicroStrategy too much in this whole conversation about Bitcoin treasury companies. And, you know, what Mike did back in, well, when he announced in September 2020, August 2020, whenever it was, when he made that first buy, that was literally putting cash they had on their balance sheet into Bitcoin to keep a company alive in a time that was very, very, you didn't know what was going to happen. We were in very, very stormy waters, and money was being thrown around left, right, and center. All of this quantitative easing. Nobody knew what was going on. We were all locked down. And Mike just wanted to keep, from what I could tell, wanted to keep his company alive and look after his employees. Now, 5 years later, that's a completely different story. They've gone through the process. They understand the asset way deeper than they did back then. Obviously, they have their strategy days, and they're trying to educate as many people as they possibly can about how best practices to put Bitcoin on the balance sheet. That just doesn't seem to be what's happening with these new ones that are getting spun up. Like they're trying to sprint before they can even crawl, right? It's taken Mike and his team 5 years to get to this level of sophistication.
Yeah, and then that brings up a good point in that I think like at a minimum, there's probably 3 core buckets in what we're talking about here. And it's like MicroStrategy with the Immaculate Conception. Like there was one to get this size of Bitcoin and play off of that reflexive flywheel for capital markets and the volatility and all the products they're creating. And then I think that there's like natural pubcos that already were existed and had some type of company, and then they're leaning into it. And then I think there's the last layer of like the hold co that just comes in to buy Bitcoin, and then has some different different incentive. And they're different because there's some that maybe want exit liquidity, right, for their own, like to make more Bitcoin. But I think you referenced some here that like there's a lot of capital that sits outside that's like, I don't want to say it's black, but it's capital that isn't in the financial system. And if you can generate it outside and then park it into the financial system via like, the publicly traded company, and then you can start to leverage, to lend against that and create derivatives, then it gives you a way to bring it in. Like there's just different incentive models depending on where people are. And this is without naming, but you probably know what I'm talking about. Like there's different angles to why people are doing this. And I think we're just getting started. So there's probably going to be more. And this is where it ties back to maybe this was always the way it's going to play out. I think that will be probably the most interesting is somebody eventually will get hacked, or they will blow up because of leverage or the volatility. And it's going to be really interesting to see where the flight to quality goes into the different pubcos like a MicroStrategy versus where the kind of like it's going to be like reflexive with the stock price. And then do you rebuy the Bitcoin? Do you sell the Bitcoin? Like what happens to these companies? Because I think we live in this momentum narrative based culture, right? Vibes. And so as fast as things go up, we all know as quick as they can come down. And it's like, what is that going to look like? Mm-hmm. Is the thing that I think we're probably trying to all figure out.
Yeah, that's a great point. I mean, the genie's out of the bottle, right? Or the toothpaste is out of the tube. You're not going to put it back in, and something is going to happen. There is going to be a big blow up. There'll be an Enron style Bitcoin treasury company, or there'll be a founding team that just disappears or something off into the sunset, and all that capital will. I mean, it would have set the flywheel in motion because they will still like that money on the periphery will still want in, but now the due diligence will be a lot deeper, and that's where companies like MicroStrategy have stood the test of time, and people love them or hate them. It doesn't really matter. Here they are, and they're still listed, and it's still the same team, and it's still the same CEO, chairman, and they've still got the same business analytics product that is being offered into the marketplace. That's probably where that money is going to be attracted.
Yeah, I think the other side is if the market can grow fast enough to create products for these different models to actually generate revenue and justify holding Bitcoin. So I'll give you an example. As a company we were looking at, and there's multiple out there trying to do it, where you're ultimately allowing, it's in the US, but I think this probably exists globally, where the majority of a lot of people's wealth sits in their, the equity in their real estate. And so to take some conservative leverage out of that real estate, I think we all agree, similar to equity markets, like real estate, maybe it corrects, but it can't really de-lever because it would just be chaos in the world in the same way like the equity markets crash. And so, the idea is if somebody holds, let's just say they have $1 million valued home and they had $500,000 in equity in there, they could take some conservative portion of that 500K, purchase it, that the company would purchase, Bitcoin on their behalf, and then they participate in the upside, right? Well, you have to get the other side of that market, which is the dollar liquidity to buy the Bitcoin or the Bitcoin. And so it's actually a very interesting product for OGs or large Bitcoin holders to park the Bitcoin, and then participate in some of the upsides, right? Like, if you park dollars your Bitcoin, and then as the price moves, you get your Bitcoin back plus whatever the additional. I don't see anything wrong with that. Like, I think that's a natural forces of the market will grow, and Bitcoin's going to get infused in all these things that are over priced as far as like had a monetary premium. And it's like, well, how fast does that happen? Because I do think that will help some of these companies be able to justify. I think that's their vision of what or at least some of them that are trying to do something interesting. But the problem is, like, we're so early in infancy in Bitcoin's market. And then the problem with being in infancy in the Bitcoin market and the products is most of them all blow up when you first start, because Bitcoin's like this radioactive stuff that we've seen this in Wall Street. Like, you try to lend against it and everyone blew up. Like, something I'm very proud of is that on chain, we never suffered one loan loss. $1 billion plus book never suffered one loan loss, never suffered. That's unheard of in retail lending. Everyone blew up. And it's because it was transparent, leverage multi-institution, all these like natural kind of things that we know are kind of core to building in the space. Well, these people don't know that. And even Bitcoiners coming in don't know that, because a lot of people like were Bitcoiners at BlockFi or other companies, but they just build off of fiat world. They're thinking in very 2D ways of building versus 3D. And that's what I ultimately think of, like, multi-institution. It's this notion of it's a 3-dimensional way to build what historically was, if you were going to buy a horse 100 years ago, you just gave somebody in exchange your gold. It's the same thing we do today. We send the Bitcoin to a third party. We hope to God they give it back to us. And there's just a new architecture now for all of us.
Yeah, it's going to be an interesting 18 months, mate. Really is. And I'm here for it, obviously. I hope there's not. I hope my worst fears don't come to pass. Let's put it that way. I hope I'm being too overcautious. I hope I'm being too conspiratorial, and everything's going to be fine. And, Wall Street's going to come, and Bitcoin's going to do its thing and turn clown world back on its back. It's going to right the ship. But yeah, look, I came from that world. I came from Wall Street. I know what these people do. I've seen inside that particular company that we mentioned earlier, and that's where my concern is coming from. So again, warning to the listeners: just stack sats, stay humble, take self custody, and keep educating yourself. But I will now ask you the final question, Michael. If you got one last orange pill left to give to somebody, who would you give it to and why?
Oof. I mean, if the first person that comes to mind is the orange man, Mr. Donald Trump, because it seems like he has the ability and what's happening to really shake things up for better or worse. And he obviously doesn't understand Bitcoin. And I think what he does understand is himself and his legacy. And the notion that he could, if he really truly understood what it meant, not only for his own personal finances, we know they're making small allocations, but to really materially move in that direction, and then figure out a way to really embrace what we're doing or what's happening here, it'd be pretty transformative. But I don't think he really understands what Bitcoin is.
He's too busy spinning up meme coins on Solana, right? So it's that's the problem.
Yep. Yeah. Him and his network around him, I think they're opportunists. It's kind of encapsulates everything we talked about here is Trump and the team. So we see them just getting exposure to everything. It's bullish sentiment in the sense that they know what's coming. I think there's no way the next 18 months don't end up, I shouldn't say no way, but would end up in favor of the price, but it's at the cost of how much learning and how much touching the stove our individual's going to have to do. And then we didn't talk about this, but where it ends up in the sentiment, because we saw post FTX how much the sentiment was against Bitcoin, even though it had nothing to do with Bitcoin. It's like, if the deleveraging really does happen, how much of the sentiment is going to happen or shift around Bitcoin and how it's controlled to make sure it never happens again. It could be a very nasty byproduct.
Well, yeah, if that does happen, then the opposing party are going to use that big time attack on a crypto-friendly president, right? It happened on your watch. You can just see all of the headlines now. So yeah, the next 4 years that we could be going into another hard crypto winter, for want of a better word, Bitcoin winter. So yeah, tread carefully, guys. Michael, how can people get a hold of you if they want to learn more about Onramp? Or I actually saw just recently, it looked like you guys were trying to add to the team. So if you've got anything you want to announce there, just let the listeners know.
Yeah, appreciate it. If folks are looking to build in this space, whether they have ideas core to what we're doing, talked about here, but in the right way, please reach out. But then we're also hiring across our portfolio companies and at Onramp. So again, if you want to build in the right way, you can reach out. My Twitter handle is mtanguma or Michael at onrampbitcoin.com. And yeah, we're always open to feedback, things we can do better, or if we can make introductions. It's still so early, so we always appreciate the DMs or the emails and happy to route them or jump on a call if it makes sense.
Excellent. All right. Well, thanks for coming on, Michael. Thanks for giving up your time. Thanks for building Bitcoin businesses for us to use. And yeah, well, let's catch up again soon.
Yeah, definitely. Thanks for having me on, Daniel.
Take care.